Hi, welcome to the Market Alert for Monday, the 17th of March 2025. So futures yields, gold, all jump after Schumer caves to keep government open. That's Chuck Schumer, Democrat. And interesting, isn't it, that this man, when they were in power, fought to get the funding increased and continued. So this is to raise the debt ceiling to keep the government funded. I think they're printing 1 trillion every 100 days now. This seems to come around very, very quickly these days. So, of course, when they're in opposition, they want to make it as difficult as possible for the incumbent government, and that's what he tried to do, but in the end, he relented. So stocks shrug off sentiment slump. A century-old signal flashes red. Nauseating week stuck in macro-driven chop there. And stocks find solace after recent bloodbath. And then finally, spot gold makes fresh record high above $3,000 an ounce. And sentiment lifts ahead of Trump's executive orders and UOM. And stocks gain with sentiment lifted after a strong Chinese session overnight. And of course, that was Thursday night last week because we're looking at Friday's headlines here. Economic news for this week. We've got core retail sales today. Retail sales for this is all for the US and Empire State Manufacturing. Got German ZEW economic sentiment as well. But the big one for this week is going to be the Fed funds rate. And that is going to remain, according to this current forecast, unchanged. That's the big one for this week. And what have we got? Actually, we've got the UK interest rates as well, and they look set to be left where they currently are at the moment as well. And then Bailey's going to be speaking as well. So all round a mess. The only thing that's positive here is, well, it's positive for anybody that holds gold, but anybody that doesn't, it's not so positive because it's not a matter of gold going up, it's a matter of currency decline. So that's a positive sign there at that 3,000. We'll look at that in more detail in just a moment, but let's kick off and have a look at the stock markets for Friday. So in the Dow on Friday, the market trying to move back up, but banging its head against the 5-bar moving average and then down slightly overnight at the moment. So still in that downtrend, it needs to find support in order to move higher. Just have a look at the weekly charts, and you can see we're down to 89 on Friday, or of last week we traded down to 89. And at the moment we've just got a bit of a bounce there, but I'm sure that it won't be long before we're actually testing the 40,000 level, which will be interesting because the market will have given back somewhere in the region of, if we just put in the line there, the resistance of some 5,000 points. If we do go down to 5,000, quite possible. Just to go and have a test of that level, but at the moment we're still over 1,000 points above that at the moment. And in the 30-minute chart you can see that we've managed to move higher during Friday, and it held, but we're struggling a bit at the DP at the moment. Market needs to get above this, the 200 MA, the close, and most importantly take out Friday's high there. In the German DAX, nice retracement there, up to 62% retracement during Friday. The volume is dropping off now, so the turmoil is starting to drop off. Volatility is dropping off there as well, so we could expect a bit of a sideways move at the moment. 30-minute chart, market has moved up significantly. We've got 100 there, 200 to that blue line, 300, 400, 500, nearly 600 points on Friday for the German DAX range there. So a big move, and obviously pulling back a bit there at the moment. We haven't made a new high overnight, so just a bit of a pullback there. Watch the 50 EMA and the DP if you are in the 30-minute chart there. DP across all time frames, of course, is very important level. And in the S&P, again, we're starting to consolidate here. Volume dropping off. We're oversold, and we've crossed over to try and move back to the upside. The market could trade sideways until Wednesday as it waits for those FOMC numbers. Again, just like the Dow, cash market opened on Friday, sent the market higher, and there you can see the market sitting at the DP currently overnight. Meanwhile, in the FT100, this also bouncing. Again, market volume dropping off. Selling's disappeared for the time being. Stochastics have crossed and trying to make its way back to the upside. So from this high down to the low there, you can see we've come back around the 50% level. It's important that we break this if we're going to stand any chance of moving back to the upside there. 30-minute chart, straight up. As you can see there, nice move to the upside, just over 100 points, 125 points area. The market overnight hasn't taken out Friday's high yet, and it's sort of working its way down to the DP. It depends what executive orders Trump's got and what he's going to continue to do with tariffs on a daily basis at the moment. But the market at the moment, all of them seem to have settled down a bit following the last couple of weeks of turmoil and carnage. So in the US dollar, this too finding a bit of support, of course, from that 103 level, but running out of steam on the upside, sideways at the moment for this market. So let's have a look at the $3,000 for spot gold. Just kick off with silver as we usually do. This was allowed to move up on Friday. It actually hit 34.07 as well. It's holding overnight, which is a bit of a surprise for me. If we look at the weekly chart, you can see where we've got to go to. It's 34.85 in order to move higher. We've got through the 78. Will it hold? Who knows? And the 89. But the key here is the 34.85 level for this market. Again, the daily chart, you can see there we've got to take out Friday's high of 34.07. And 30-minute chart, well, there's a surprise, isn't it? What a surprise. Smackdown Friday, silver smackdown, and then we're just staying above the DP at the moment. So we might be able to have another run at the high. But there's the 130 and there's the afternoon. And that was because, as I've said for a long time in the market alert, when we hit 3,000 in gold, the market will be sold into. And there we can see the selling there. That's how it works. Now what we need to see happen here, if we go down to a smaller time frame, we need to see Friday's high, $3,004. Need to see the market go through this level. We just go to a weekly chart, go through this level. Oh, it's not loaded properly there. We need to go through this 3,400. We'll use the daily chart. We need the market to go through this and hold above this level. So we're looking for a big bar to drive through, and then for this level to be a support area and then make its way to the upside. There are rumours of it having a very quick run up to 3,500, but to be honest with you, it doesn't really make any difference what the forecasts are, because nobody really knows. You have to trade the price action as you see it on a daily basis. There are certain fundamentals, like I say, psychological levels of 3,000 for gold is significant, but it again, all you need to know is that it's got to go through and stay through. That's as simple as that. So in the gold-silver ratio, again, you can see this sideways move there, channel, and silver has got to move higher and the gold-silver ratio has got to move lower. Again, we're starting to see green, so don't be surprised if we saw this continue for some time in the gold-silver ratio. There you can see how long we've been in this sideways move. The good news is, of course, when it does break, it will be quite significant, but at the moment we're in a range from 88 all the way up to 92. Right, let's have a quick look at Friday's trades. So with the drop-off in volatility, we do start to see some trading signals. We didn't get any in Friday morning. The market down and then making its way up, as you can see there, making higher highs as the morning unfolded. And then we have the first potential buy signal there, followed by a short signal, trading down to the psychological level there, and then holding. Here you had an 89% retracement, which is why the market reversed and moved back to the downside there. So picking up from the, and there's an interesting bar. Look at that volume there. Actually, while I'm thinking about it, when I was watching this one on Friday as well, when you get these spikes up in the green, you get that light green bar, that can stop an up move as well. And you think, well, it's all green, why would that be the case? Well, what happens is a lot of traders get out as the market rallies. They don't get out as it starts to come down. That's why markets stop. So if you get these big spikes in volume like this, you will see after a decent move, you'll see prices switch sides. But of course the markets want to be on the highs at the moment, so it's then brought back. This time you see the selling there where the abandoned ship, and the same there as well. You can from this bar see the selling there, and now you think, well, actually it's narrower, but the market hasn't moved lower. No, because they'll buy back in with what's on the left hand side, or where the market broke through. And then we get some more selling here, and down she comes. They try to hold the market in this bar with the green, and then there's that spike in selling, and then the same there. So again, you can see exactly what these traders are up to. So there was some selling. The market comes back, and where does it stop? Well, it stops where it found support before, at that psychological level, and then prices move higher, and then they continue to move higher. Again, you've got your reds there where the market sees some selling coming in, and also here, but that again is at the R1, and then the market pulls back, and then we spike back up again, which you can see there as the market piled on the points. And then again we've got red at the psychological level where the market sees some selling, and then sideways to higher as we go back up, and then a pullback. Again, you see that green situation there with the green bars, and then they're just getting out and leaving the weak traders holding the positions, and then the market comes down, and then you get the US coming on board there. News item there, which is why that's gapped down. That trade would not be valid because of the news. And then we get into a choppy sideways move. Again, we're back down, which is fine, and then again once more, but short term drops to the downside, and the market then moving back to the upside, as you can see there, through the evening until we get into the early evening, where the market pulls back a bit. But still big moves for a Friday evening, these are, which is very, very unusual. I mean, now we're up to early evening, going into 6:30, 7 o'clock time, and that's where I stopped the recording. So yeah, quite a lot of volatility there. Let's have a quick look at what's going on overnight, and again you can see I haven't got the volume on there, but I can tell you from looking at the other screen, this bar here has a huge volume that's just stopped the market from moving lower. So we've got a bit of a sell-off going there this morning. I mean, already from here down to here is 100 points, so quite a lot of volatility still around for this market. Right, that will do it for today. So as we head into a new week, let's see what unfolds. So have a great day, and as ever, thanks for watching. See you in the next